Hi, I'm Chuck Gibson. This is Taking Stock with Art Jarvis, a bi-weekly discussion of what is happening in the economy, the world of finance, and personal investment with Art Jarvis. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Now here is Taking Stock. Welcome to Taking Stock, episode number 16. But Art Jarvis, welcome back. Happy New Year. And this is the first of 2024 Taking Stock.
Happy New Year.
Happy New Year. Yeah. I think there's still some confetti laying around here.
That's right. Up in the corner somewhere.
Big celebration.
Yeah.
We won't get in. There's still a lot, what do we got? A whole year in front of us.
A whole year. 51 weeks to go.
Yes, exactly.
51 weeks and 26 potential episodes of Taking Stock.
Exactly. Well, you know what? Not bad because we didn't get it started right away in 2023.
Right.
And we missed a couple. There was some vacation time and missed a couple. But we had 15 episodes out of a potential 26 in 2023. And this year we're gonna hit our 26 one way or another.
Sounds like a plan to me. Got some great feedback and things, so we'll just make it even better this year. That's
worth noting because we kind of finished 2023 talking about how maybe Taking Stock was getting some legs. So you know what? As we start 2024, thank you to all of you who've already been listening and apparently helping spread the word a little bit because Taking Stock has picked up in numbers in that last episode for 2023. So hopefully bigger, even better.
Yeah, I agree. And I appreciate it, too. That's good. People will come up and say, hey, I listened. And I'm like, oh, you did?
I know, right?
And so what'd you like about it? Blah, 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 blah. And it's good. And the other thing I say to people all the time is if there's something you would like to hear us talk about, tell us, right? I mean, there might, we can give you the world according to Chuck and Art, every couple of weeks. But if, there's something specific people want to hear, then, let us know.
Well, you know what? On that note, and we'll get into what's happening in the economy and investing world in just a second. But on that note, we finished 2023, and like the last question that we addressed in episode number 15 was, I said, hey, if you don't have the couple of $100,000 portfolio, you're a young person just trying to get in, and you said, you know what? It's simple. If you're a young person, $100 a month, put it in stock, be consistent, and you'll have a couple $100,000, just do it for those 30 or 40 years until you retire. So I want to tell you, our granddaughter, I'm not going to name any names. Okay. I shouldn't even have said our granddaughter. But anyway, too late now, I said granddaughter. So granddaughter messaged us, and she had a car problem and the money and yada, yada, yada. And she said, do you have any suggestions? Well, which was really, I need some money to get, the car fixed or whatever, which is fine. So we were in a situation, we're able to help her out. But when we said, can you come pick up, we got the money. If you want to come by the house, we'll give it to you. And I said, here, go to the 24-minute mark on Taking Stock and listen, because Art Jarvis is going to give you some really good advice. So I wanted to tell you, we know a couple of ears, granddaughter and her boyfriend, who, he's working, and they both are like, we want to do something. We want to save some money. We want to get going. There it was. And what a great piece of advice. So as we start 2024, if you're a youngster, and I don't mean, 14 years old or whatever, but you're young, getting into college, getting into the working world, done with high school, making some money of your own. Art, that was great advice. $100 a month, no excuses. You don't need to buy that toy or those, a cup of coffee at Starbucks every day of the week. Right. Put that $100 a month away. It was a great thing. And who are you? Ben Franklin and the compounding thing.
The eighth wonder of the world, compound interest.
Great story. But anyway, we want to thank you because you passed that along. It didn't come from Grandpa giving a lecture or Grandma giving a lecture. It's like, oh, this is somebody who's doing this.
Some other guy said it, so it must be true.
Yeah. Well, the interesting thing, Art, because in my opinion, from what I see, I think you have done pretty well for yourself. We don't have to get into it, but that's a person who the world that sees you says, Art Jarvis has done pretty well. And you said when you shared that story, I wish somebody would have told me that.
Mm-hmm. That's right. Be way further along if I had started earlier. That's
my additional comment to that is Art Jarvis even says, I wish somebody would have told me. Mm-hmm. And then I say, well, he must have figured it out. So.
Well, we'll just leave that there. But here's the thing I would have loved to happen is the Roth IRA was a thing back when I was in my 20s. We talk about this. You put away $100 a month. You do it for 40 years, and you end up with whatever it is, $600,000. But let's say you put $50,000 away in that time frame. If you've got a portfolio that's $600,000, guess what? That's $550,000 that you never pay taxes on.
Right.
That's a good deal. So I wish that Roth IRA was around back when I was in my 20s because, that's a big, and when you start taking money out of your IRAs when you retire, there are things to consider. It can mess with your Social Security and all kinds of things. So, no, you're exactly right. If we make a difference in a couple people's lives doing this, that's a good thing. But you're right. Put it away. Invest it, forget about it. Don't touch it, and you will be in great shape. And again, we use that $100 number, but that's you not buying Starbucks and putting away. You go get your job and you got a 401k and you're putting away way more than $100 a month, and your employer's matching a certain percentage of that. That $100 number, when we sit here and talk about 600,000 or something, that 600,000 becomes a much, much bigger number if you stick to kind of those rules of just doing it and leaving it alone. So
makes perfect sense.
Yeah, well,
a good place to start on the episode number 16 as we begin 2024 is just a reminder. If you are a person right now and it's the beginning of the year and everybody's making resolutions, make that your financial resolution. If you're 20, 18, 20, 22, whatever you are years old and just getting started and trying to figure out how do I do this? Well, start simple, $100 a month, and somebody can help you figure out where to put that. Yeah. What stock or how to get going?
Yeah. Put it in an S&P 500 mutual fund.
There you go.
It's, if you want to make it simple, not doing it just. But the other thing is make it automatic.
Right.
Make sure that $100 is something that happens. It comes out of your checking account, whatever day of the month you want it to come out. It comes directly out of your checking account, goes directly into your investment account. Automatically, because if you have to actually sit there and physically make a transfer or write a check, how many times does that end up not happening? But if it's happening automatically, you don't have to worry about it.
Well, there's some fun little tips like that. Automatic is important, and you talk about, well, how does somebody get paid? If they get paid every week, that's one thing. Mm-hmm. But a lot of people get paid, every 2 weeks. Mm-hmm. Every 2 weeks, we just said this, taking stock has the opportunity to produce, because we do it every 2 weeks. That's 26 episodes. In a 12-month year, which, if you go every 2 weeks, that's like 24 weeks. Mm-hmm. Well, that's not true. There's 26 weeks in the 50, or 26 pays, 26 pay periods in a 52-week year if you get paid every 2 weeks. Mm-hmm. And so another side tip is like, well, it should only be 24 because there's just 12 months.
Right.
So that's 2 extra pay periods.
That's right.
Set those aside. Mm-hmm. Call that bonus money.
Right.
little tips. That one, I got that one from Sue Gibson, my
lovely the expert.
Well, she takes care of the finances at our house.
Right? Yeah, it's working, so don't mess with it, right?
I'm not stupid. I'm in the business of words. Somebody else is doing numbers.
Yeah.
That's right. You and Sue.
That's right. Yeah, you don't want me doing words. Look at that. That's for sure. But I mean, and here's the thing. Like, some people will say, how should I do this? Should I do this every paycheck? Should I do it once a month? And in general, I always say the market goes up about 80% of the time. So if you're looking at a 5-year period, in general, 4 of those years are going to be positive years, and one's going to be a negative year. Now, you could put 2 or 3 years together that are negative, but in general, 4 out of 5 are going to be positives. Well, if you're putting money, the earlier you're putting money in, the more that money's going to grow. Right? Now, there's going to be years where that will make a liar out of me, but 80% of the time, that will usually be true. So, if I was getting paid 4 times a month or twice a month, I would, instead of doing $100 a month, I would do the $25 every week or the $50 every other week or something like that, because you're getting it in there earlier. And is it going to make, is it going to be, $100,000 difference? No. But is it going to make a difference? Sure, it is.
Well, I'll just throw one more fun fact in. So, of course, this is a leap year.
Yeah.
So we have a February 29th.
Yeah.
If you're working on February 29th, that's an extra day this year. Whatever money you earn on February 29th, that's a whole day's pay that's not happening last year, not happening next year, or the 2 years after that, or the 3 years after that. So this year you get a whole extra day's pay.
Yeah.
Put it away.
Yeah, there you go.
Just another. I mean, there's little tips that how do you throw in a few extra dollars, and of course then let the compounding Mr. Franklin loves so dearly, the 8th wonder of the world, take place for you.
Yeah.
Compound interest.
There's many things like that. I mean, often you hear where they tell you to do one extra mortgage payment a year, and it makes a big difference. That one mortgage payment over several years, it knocks, I'm not sure what the number is, but a few years off, or a couple of years off, So instead of being a 30-year loan, it's a 28-year loan.
Yeah. Somebody knows that formula for how that affects, because the interest rate and because that goes direct 100% to the
exactly
payment.
Right.
And so it's amazing how things work. You have to be putting that money away consistently. Art just told you folks, if you're listening, share it with your kids. And kids, hopefully we're getting some younger audience here as well, and you're listening, and you hear that, make it automatic. And give yourself a chance.
Yeah.
In the future. Give yourself a chance.
We go in every once in a while. We'll go into high schools and things like that and talk to classes about investing and credit cards and credit scores and all kinds of different financial topics. But you're talking to a 17-year-old kid about his retirement when he's 65, right? So pretty quickly you start to see the eyes glass over. But if a couple of them listen, I mean, if one of them, let's say they're 17 years old and they start socking away $50 a month, by the time they're 30, they're way ahead of most people. Just by doing that, and the trick is just getting started. It really is. And it's not hard to do. They've made it very easy. You can go to a Fidelity or a Schwab or whatever. Go online. You can set up an account. You can set up the automatic transfers. They've made it very easy on you to do it. So
I used to have to get my paycheck, cash the paycheck, or deposit the paycheck. Do that. Go to the bank. Not whatever you flash your phone or what do you call it?
Mobile deposit.
Yeah, I mean, it's just like, I don't know. You got your QR code thing and swipe it. That's the word I was looking for. We didn't just swipe our phone. We went in and handed money over, paper and a signature on it and all that. It's the things can be so much easier today. In the world of managing your money and managing your money future, your financial future. So I was going to ask you, but you answered the question. But I was going to ask you. So, like when you go into the schools and you're talking to them, what does that look like? And you sort of you see the eyes glaze over.
It's a bell-shaped curve, right? I mean, you got some that are really into it, and
Right.
then I keep saying I was a weird kid. I really enjoyed investing in numbers and things when I was younger. I was, my father worked for General Motors. I paid attention to the General Motors stock. Don't ask me how it got started, but that's what. And it's the same thing in the classrooms. You have kids who are actually very, very interested in what you're saying. You've got the ones in the middle that are tolerating you, right? And then you got the ones on the other end. You lost them, when you start talking about credit scores and things like that. But it's and it's just, sometimes it's the same thing with adults too. But if you get a couple of them and it makes a difference, then it's well worth the time.
Sometimes it happens with adults. You're not seeing my eyes glaze over. I hoped I was being able to not show that.
Okay.
Since I said I'm a word guy and not a numbers guy, some of this is like flying way over my head. But that aside, so. Anyway, getting to what's really happening out there, and this has been great, fun conversation. Hopefully some people benefit from hearing that, because it's a really good story of how people can get started. But so what's happening as we're in this first week? Well, now into the second week of 2024.
Yeah, last year we finished strong, which that was kind of the you're kind of worried. What does that last week bring? Do you start getting a whole lot of window dressing and a whole lot of profit taking, or does it carry that Santa Claus rally? Does that carry on through the year and into this year? So I was very happy. Last year, some of the indexes were up 20%. International markets were up 16%. So it was in my opinion, it was a very good year. It was an aggravating year because of how volatile it was, but it worked out really well toward the end. And we've talked about it a number of times, was the rhetoric did not match the economic numbers. So finally in the last couple months of last year, it felt like the whole attitude changed and people started paying, investors and traders started paying much more attention to the actual numbers. Okay, and we were in our third year where we were supposed to have a recession and it didn't materialize. So we had a great year last year. That carried over into this year. We had some profit taking. The first week, especially the first 2 days, were a couple of big down days. But in my world, that's kind of to be expected. But they're just changing things and making changes in the portfolio. Some people, for no other reason than it's a new year, which we've talked about before, is like, I don't operate on a calendar year. We operate on,
the fiscal year, as it were.
Where are we? I don't care if it's December or March. It's where are we today and where are we looking 12, 18 months forward. But even those 2 negative days and that negative, we had 9 weeks in a row of positive returns in the stock market at the end of 2023. This first week of 2024 was the first down week in 9 weeks.
In over
weeks.
2 months.
Yeah. So it was nice. It was almost getting to be fun again. But I mean, no. but it's carried over. But even yet, still, the positivity's still there. No, there wasn't. We had some things going on in the Red Sea and stuff. So that there's always going to be something going on. There's always going to be something negative to look at. But you got to take a look at it and say, okay, yes, is that bad? Most certainly, it's bad. Bad things are going on. But what's the impact? What's the worst case scenario? What's the best case scenario? You usually end somewhere in the middle, and what's that overall impact? And I think we're still carrying that positivity this year, and we've already begun to very much so work our way back from those couple of down days we had last week. So,
well, I was going to say what was the down days? What impacted the market in the first? Here we are on January 9th. Mm-hmm. What impacted the market in these first 9 days of January that we had a couple of down days? Is there something that you saw? Or
the biggest thing is, 6-7 months ago, we were hit 5% on the 10-year Treasury, so interest rates are going up, and that had a negative impact on the market. Well, from that point on, the interest rates kept dropping. We actually got down below 4%. First few days of this year, 2024, those interest rates went from like 3.75, and they actually got back above 4% for a short period. So that sends a ripple through the market, right? And that's legit. In the like, does it belong there? Is the first question. My answer would be no. It was kind of an overreaction, but higher interest rates do have an impact on the economy. They do have an impact on the returns in your portfolio. So that's whether it belongs there or not. It's still a real thing, right?
It's there, yeah.
It's something that when I'm doing my work and I'm trying to come up with the present value of the future of the stock market and things like that, that higher interest rates causes you to have a lower projected number in the future. We've already worked our way back down below 4 again. We're back in the 390s or whatever, so there was that, and then you throw in, the companies are not going to go through the Red Sea; they're going to go all the way down, south around the bend and come back up. So that's going to cause delays. That's going to cause increased prices and things like that. So those are also real. But what's the real overall impact? How severe is it? And I would argue it's not that severe. So we're carrying over in this year, and you look at, you still have all those economic numbers that we talk about, and they're still improving.
I was going to say, still headed in a correct or the right direction.
Correct.
Positive direction.
Nothing has changed, right? Those numbers are still good or improving. So that's good. You have the projected earnings numbers coming for the 2024 and heading into 2025. You still have what I call more normalized interest rates. That's probably the biggest thing is, we went from, 2020 into 2021, then 2022, we started raising interest rates, and interest rates were all over the place, and they were a problem.
Right.
Well, we're finally getting back into what I would call more normalized rates. Okay, so that makes life a little bit easier. So, I don't want to, again, this is not investment advice, but with the normal caveat, as long as nobody does anything stupid, right? But
there's that word again.
Yeah, I know.
I gave you permission to use it here. Don't, sorry.
Well, I use it.
Sorry,
a lot.
Kim.
So,
sorry, Kim.
Yeah.
I gave your husband permission to use the word stupid here. He's not calling people stupid. He's saying sometimes people who are brilliant do stupid things.
Do things that are not that bright.
He can call their.
But that being said, as long as and we have an election year. Let's not forget we're in an election year now, so that will add some volatility with all the rhetoric and all the promises and all. Can
we pull like a sheet over that and just only reveal it on election day and then go back?
That would make things a lot easier. But I think again, like I said, I'm not telling but if I had to say, okay, here's my bet for 2024, I think we could easily have double-digit returns again this year. At least sometime during the year
10 or better.
Through the end of the year.
10 or
better. I think because there's some people out there they're prognosticating. They're looking. So we're just call it roughly 4,700 on the S&P 500 index. They're looking for 5,400 by the end of the year. So that's roughly 14% from where we are right now. And then they're also talking about 6,000 by the end of 2025. Now, let's be fair. They're getting extended out there, and it's hard enough to tell you what's going to happen next week. So it's kind of like Cincinnati. It's kind of like Cincinnati weather. It's subject to change.
My head's spinning right now. I didn't, prior to us sitting here to record episode 16 of Taking Stock, I did not promote. Episode 16's coming up. Listen in to hear Art Jarvis projections for 2024. So we didn't promote it, but you tossed out a little bit. You said I would bet. Not giving. But you know what? Here we are coming to the end of episode number 16. It's 2 weeks until 17, so you have 2 weeks. On episode 17, we're going to talk about some projections you might make right now.
Okay.
And again, as you said, it's not about a calendar year. So we're going to hear in 2 weeks from now a little bit about what you're seeing for the next, 3 months, 6 months, 9, 12, 18 months out. How are you projecting? And what are you thinking?
Yeah, that would be interesting.
I think it will be.
Yeah, then you can hold my feet over the fire at the end of the year. So.
Yeah, well, it's recorded and there is a record. There's a record of everything he said. Which I did not send to Chairman Powell.
Yeah. Well, you know what? Well, you asked me my opinion, and I gave it to you.
Well, he might not have wanted to hear it.
And you know what? I don't think he cares. But there's this guy from Loveland, Ohio, that doesn't like what you're doing. I'm pretty sure he's not too concerned about it.
The response to that might be the current chairman's last name is not Jarvis.
That's right, exactly. Nor does Mr. Jarvis want it to be. Yeah, no.
So if the opportunity presented itself, you're not jumping at becoming the Fed chairman, huh?
I've kind of in my life I've had my filling of politics. Let's we'll just go with that. But but the funny thing is so we did that episode, and I kind of was straightforward about how I felt about how things have been. Well, all of a sudden he threw out a whole bunch of positive comments, and the market took off. So. Yeah,
if you're a first-time listener to Taking Stock, what you're going to want to do is go bring up Taking Stock, episode number 14.
Is that right, 14? Yeah.
But in fairness, Art Jarvis did offer. He didn't have to backtrack, but he did acknowledge in episode 15 how things went, and so regardless of any opinions of where the feds did this or did that over the course of the year, and that was real. I mean, there was some fair criticism. We're not beating up Art Jarvis for offering, incorrect, summaries.
I stand by my criticism.
There you go.
Okay,
right.
But the thing, I guess, the point would be, and I know you want to wrap up, but the point would be I felt the markets were not where they belonged because of all the negativity that was being projected and talked about. And the funny thing is, as soon as the powers that be offered some positive words that, number one, we hadn't seen from them before, so it was a complete surprise when they said them, the market took off. That was like the signal, like, okay, go. And there was so much money sitting on the sidelines. Again, the nice thing is they can sit on the sidelines and make 5% right now. There was so much sitting on the sidelines that money all of a sudden started to flow back into the stock markets.
Well, not necessarily feet to the fire, but in 2 weeks,
right,
we'll give you a chance to, So you got some homework this time.
Fair enough.
Come right, and maybe I have some homework too, but because I don't even know what questions to ask you. What are you projecting for this, that, or the other thing? I got an idea.
Yeah,
I have an idea.
As I'll say it one more time, there's always, if you look at something, I can give you 12 reasons why to buy it, and I can give you 12 reasons why not to buy it. So there's always things to look at from a positive and from a negative.
Well, and at the end of the day, it becomes what. Custom built to the investor, whoever that may be, your client or anybody in this business, their client, whoever the investor is. You got to look at what are you trying to accomplish, and what risk factors you can endure, and all that. Right?
Well, that's right.
At the end of the day,
and this year we had portfolios up 16 to 28%.
I see.
Somewhere in there. The majority of them were in that range. And the people that made 16% are just as happy as the people that made 28%. Because the ones that made 28% made 28%, but they bounced around all over the place. But one, their risk tolerance accepts that, their time frame accepts that, whereas these people down here are more retired, and that they don't want to see their portfolios bouncing around and making 12, losing 10, and things like that. So it's good, and especially after the last few years, double-digit returns were nice.
Absolutely. Well, we're going to hear more about that in episode number 17 coming up in 2 weeks from now. So let's see That's going to be, today's the 9th, so like around the 23rd of January, we'll be back at it, and we'll hear those projections.
Yeah.
But today, on January the 9th, as we sit here and record this episode number 16 of Taking Stock, I want to thank you once again, Art Jarvis, for taking the time.
As always, thank you, and I truly am looking forward to 2024.
Until next time.
Thanks for joining us for this edition of Taking Stock with Art Jarvis. Join us again in 2 weeks for our next edition. Taking Stock with Art Jarvis is a presentation of Loveland Beacon in partnership with Jarvis Global Investments, LLC. Jarvis Global Investments, LLC is a registered investment advisory firm. The advisor is not attempting to furnish personalized investment advice or services during this production. Individuals should fully investigate the appropriateness of any investment before investing. Past performance is no guarantee of future results. Investments may lose value.